In anticipation of one of the crucial reports on the US economy, the US dollar index maintained its recent gains above 108.50 on Wednesday. Apparently, the healthy economy has left Fed Reserve policymakers with no choice regarding the policy decision in January. This means the US dollar is set to extend its strength across the board. The decisive factor in this situation lies with the monthly US NONFARM payrolls. The official data for December will be released on a Friday. Ahead of such a high-impact report, markets typically refrain from risky bets. However, this does not mean that currencies will not react to other incoming data. You are watching the traders calendar for January 9 and 10. For instance, the Japanese yen may have a chance to gain ground following the release of the average wage growth report. Wages are expected to inch up from a 2.6% to 2.7%, potentially boosting consumer spending. Given that inflation-adjusted real wages in Japan have remained stable, an increase in nominal wages can be seen as a positive signal, especially after a few months of decline. Thursday, January 9, could also be a favorable day for the euro. Forecasts for most major reports point to growth in the single European currency. For example, the export share in Germany's trade balance for November is expected to increase by nearly 5%, from a minus 2.8% to 2%. And this could support the euro particularly amid anticipated measures to bolster exports. Expectations of industrial recovery could also generate positive momentum for the European currency following the release of the Germany's industrial production report. Analysts say that the decline is moderating. While structural problems and soft overseas demand in Germany's auto industry persist, signs of a stabilization in the domestic industrial sector encourage euro bulls. However, there will be no more positive reports for the euro on Thursday. Retail sales data is expected to show a slowdown. Retail sales decelerated to 1.9% in October from 3% in September and are forecasted to drop further to 1.7% in November. If the forecast comes true, the euro may retreat against the US dollar, especially if the dollar receives additional support from comments by Fed Reserve policymakers. On Thursday, job cuts data will be released in the US, published by Challenger, which tracks layoffs. The report is expected to show an increase in layoffs to 65,000 in December. The automotive industry, hit hardest by tariff threats and competition from China, has borne their brunt. As a result, the US dollar may weaken on fears about economic resilience and slowing hiring. On this day, several policymakers of the Fed Reserve are also scheduled to speak, including Patrick Harker and Michelle Bowman, both members of the Board of Governors. As a rule, comments from financial policymakers increase volatility in the US dollar, triggering reactions from its currency counterparts. Friday, January 10, is a US NONFARM payrolls day. Before that, labor market data from Canada will serve as a warm-up. While the previous figure, 50,500, was the highest since April, the new report is expected to show a decline by half to 24,500. This could be bad news for the Canadian dollar and for the country's new prime minister, who is set to replace the outgoing Justin Trudeau. The US labor market surprised in November with an increase of 227,000 new jobs. Experts estimate that the December figure could remain strong at about 200,000. Any deviation from this forecast typically results in high market volatility, and thus accompanying metrics should be monitored For example, wage growth would support high inflation and strengthen the dollar, while an unemployment rise to 4.3% would weaken the dollar, signaling an economic slowdown. Traders will have only a few hours before the US session closes to respond to the report, ensuring volatility in the US dollar on a Friday evening. Markets may also factor in the University of Michigan's Consumer Sentiment Index, which will be published a few hours later. According to the reports, consumer demand is steadily rising. The index could reach 75 points in January, and thus, even if the US dollar declines after the NONFARM payroll report, strong consumer sentiment could stem the fall of the American currency. The next traders calendar will be available on a Monday, January 13. We wish you profitable trading and see you soon.